disability income webinar it's exclusively for California agents today. My name is Donna Reese, and again, I'm your long-term care disability contact for Western Southern agents. And although financial brokerage has many multiple DI carriers, today we're just focusing on one carrier, Assurity Life. And Assurity is an A-rated company that's located in Lincoln, Nebraska. It's been in business since 1890. They currently have reached $2.4 billion, B with a B, $2.4 billion in assets and are growing. Assurity's target market is the middle income market, which will further be described in today's session. Today, I had the privilege to introduce our webinar leader, who is Todd Shields. And here's some background information on Todd. Todd is the manager of the disability income products of Assurity Life and has been with Assurity Life for over 9 years, including 3 years in his current role. Todd's focus is to grow disability income sales through producer training and marketing. He's very good at that. And Todd is also the first VP, Conference Committee Chairman for the International Disability Income Society, which is the only insurance organization dedicated solely to increasing the awareness of income protection. As an overview of today's agenda and objectives, Todd will share his ideas for the need for disability insurance, product sales concepts and ideas, and general DI product information. At this point, all participants will be in listen-only mode during the webinar, and we welcome you to type in any questions in the question box located in the lower right-hand part of your screen, which will be addressed at the end of the webinar. I will return with a brief overview of how to get contracted electronically with Assurity at the end of the webinar, and that will be through the Western Southern website. If you think of any questions along the way, I'll be happy to answer them individually or via email my information will be on the last slide. So at this point, Todd, I'm going to go ahead and turn it over to you. Okay, Todd, can you hear me?
I can. Thank you, Donna, and thanks everybody for attending today's webinar. I want to talk a little bit more about the need and a little bit about the product that we have available in the state of California. As I am, I'll just wait for Donna to click over the presenter information to me. When I see that, then we can go through the.
All right, you should be there. You are the presenter. I should be has sent it over to you now.
Okay, perfect. Yeah, you know what? Donna, it's gonna make me take it over on my end here. So I'm gonna.
Yeah, good. You take it over on your end there.
There we go. Okay, perfect. So.
Okay, there we go.
What we know is that income protection is a tremendous opportunity, and I understand that this slide here is based upon the entire country, but when we think about the population in the state of California, think about those families that have household incomes between $35,000 and $125,000. And as you can see up here, there are over 52 million households within the country. So, you know, as a percentage, think about California. There's still millions and millions and millions of people out there that have that fit in with our category of who Assurity Life focuses on with our current product. LIMRA did this study about the need for income protection, and they said a few years ago during this study, of the people that they talked to, these were people that actually purchased life insurance. And of those people that purchased life insurance, only 18% can remember their agent or advisor mentioning income protection to them. Now, 18% probably doesn't sound like a lot, but we think that number might actually be high. And we say that because LIMRA did another study and said that only 52% of actual insurance agents own a disability policy on themselves. So basically what I'm trying to get at here is that if you haven't sold yourself a policy or you don't own one on yourself, I almost promise you that you're not bringing it up to your clients, and if you're not bringing it up to your clients, you're leaving all sorts of money on the table. So the question that we get a lot is, well, you know, what does it really take to be a successful disability producer? Well, if we follow these simple steps, it turns out to be not so difficult at all. First, the agent needs to have conviction. They need to ask the right questions, present the right solution. A big one is managing the expectation of the client, understand the underwriting processes and changes, and as well as product changes and sales opportunities. Now, I can tell you that Financial Brokerage and Assurity Life can help you out with every one of these things except for conviction. So what does it take to have conviction? Well, first you need to believe in the product, okay? At Assurity Life, our mission statement is to help people through difficult times. When we think about insurance in general, that's really what it does. But think about this from an income protection standpoint. If your clients are too sick or hurt to go to work, where are they going to come up with money for the long term to get them back healthy or find another occupation that they may be able to end up doing? There are things out there, but they come at a consequence. Income protection is really the only feasible way of going about doing this. Again, I'm going to hit on this. You need to own a disability policy on yourself. Okay? It doesn't even have to be an Assurity Life one. That's okay. Okay? As long as you own a disability policy on yourself, you're going to have the confidence to talk more and more about it with your clients, and you can even bring that up in your presentation to say, you know what, I believe in this so much that I have one on myself. I've actually done joint field work, and agents have actually brought out their personal disability policies and showed them to their clients to say, this is what I have on myself, and I think we need to go after something similar with you. If you only take one of a couple of things away from today's presentation, this would be one of them. You need to have a story of your own to tell. People are not sold on stats. They don't care that they have a 1 in 3 chance of becoming disabled before they retire. That's not real to them. But having a story to tell is real. And if you don't have a story of your own, go out to protectyourpaycheck.org. This is the Life Happens microsite for disability insurance. There are some awesome stories that are out there. And if I would recommend one, it would be the Bill Reed story. Not only does it incorporate income protection, but it also incorporates waiver of premium on his life policy. So you're kind of killing 2 birds with 1 stone with that story, and it's very, very powerful. I also want you to set a goal and be committed to that goal. Kind of perfect timing since we're right at the new year. Now, I understand that you're probably not going to place 100% of your cases, and that's fine. I'm going to also say that you probably don't place 100% of your life cases or long-term care cases, but nobody expects that, right? I have a tool available, which I'm going to show you in a little while, that will take a lot of the headaches out of the underwriting portion of this, because not a lot of agents sell more than a handful of policies a year. So getting our head wrapped around morbidity instead of mortality can be sometimes a bit of a challenge. Set that goal, be committed to that goal, and don't be turned off if you have a decline or if underwriting comes back and makes an offer a little bit different than what you submitted. That can happen. Set that goal and be committed to that goal. I want to show you another slide here that shows the opportunity that's out there. We use 2 disability reinsurers, and one of our reinsurers did this penetration study for us. And what we find here are the columns in green are the number of people in millions in each stated category. And the columns in blue are the percentage of those people that actually own a disability policy. So you can see on the far left, there are really not that many doctors and dentists in the United States, but about 80% of those people actually own a disability policy. And the question is, well, why is that number so big? Well, it's because through their schooling and their residencies, they are preached that they need to have income protection. And guess what they go out and do? They go out and they buy a policy. But on the right, you're going to see the polar opposite. We've got over 100 million people sitting out there, and very few, if any of those people, actually own a disability policy. Now, earlier we talked about the 52 million households. This breaks it down even further to say of those 52 million households within $125,000 and below, this actually shows the number of actual people. So we're talking over 100 million people. And Assurity's core focus is going to be within that green circle. Now, I will tell you that some changes that we made to our product a little bit earlier this year, we can step outside of that red circle, and that's okay because we will go all the way to $15,000 worth of benefit. But our core focus is around middle-income America, and that would be, again, those incomes of about $125,000 or less. So let's talk about 2 things that are going on right now in the state of California. Right now we have our PDI, which is personal disability income in the state of California. However, Donna and I had talked about this exclusively over the last couple of weeks here. We just received word back from the California Department of Insurance that Century Plus, which is the product available in all other states except California right now, has finally been approved. It only took 4.5 years, but we are there. So in the next couple of months, when we get our admin systems and our software updated, we will have a new product. And I'll tell you some of the differences as we kind of go along with the current product and what Century Plus, the new product, will have to offer. Okay? So as we talk about this, I'm going to focus on PDI, and then I'll integrate some of those differences that will be coming available to you when the new product launches. We really do focus, again, on the blue and gray collar middle income marketplace. So we're talking about contractors, plumbers, electricians, business owners. We're very good with business owners. Okay, I apologize. I'm having an error. Okay, sorry about that. I had a small error there. So basically what we have is we want to go after those people, small business owners, blue and gray collar people, managers, employees, and with some of the writers that we have available, with more writers going to be available for you when Century Plus launches, you have the capability of a product that can be tailored to meet the needs of every one of your clients. So PDI in California is ages 18 to 60, and we do use age nearest race, so date of birth is really, really important. What we also state is that the client must be working full-time, and for us, that would be 30 hours a week or more. And one of the requirements in the state of California only is that the client does need to have a minimum income of at least $2,000 per month. If they have anything under that, they are technically not eligible according to the California guidelines. We offer 4 occupation classes, and we'll go through some of these occupation classes for you. 4A is our least hazardous occupation class. Those would be people that have desk jobs, so we're talking accountants, CPAs, office workers, administrative assistants, those type of people that really have more desk job type of occupations. Insurance agents would also be included in this. They go to $15,000. We have a 3A occupation class, so we're talking a little more hazardous occupations. These would be people like pastors would be one. Outside of the state of California, and I apologize, we don't accept anybody in California in the medical markets right now, but that would include, typically outside of California, that would include people like nurses, dental hygienists, lab techs, those type of people. Those fall into more of a 3A type of category. 2As would be more of your blue-collar type of work. So we're talking the contractors, plumbers, electricians, landscapers. Those type of occupations fall into a 2A, and we can go up to a $10,000 maximum benefit. And then 1A for us would be people like roofers, tree trimmers, police, fire, those type of occupations. We can get a maximum benefit there of $8,000. Now, you can see next to every one of those we have 1, 2, and 5. That would be the years of the benefit periods available for the PDI California product right now. I will tell you that the major difference when we come out with Century Plus in California here in a couple of months is we will also have available, based upon their occupation class, we will also have a 10-year benefit period, age 65, and age 67 benefit periods available. So that's going to be a really nice feature to add to this. As you can see, we also have elimination periods of 30, 60, 90, 180, and 365 days. Now, what I will tell you is that Assurity's core focus, and it's really an industry standard, we really focus on a 90-day elimination period. That's where you're going to find the best pricing available for our product. In the state of California, we do see a majority of 5-year benefit periods, and then follow that with the 2-year benefit period. I will tell you that for all products combined, we still focus again on that 90-day elimination period, but we see about 35% of our policies have a 5-year benefit period, and 35% of our policies have an age 65 benefit period on them. So again, having that opportunity here in a couple of months when the new product launches with those longer benefit periods would be great. Now, you know, I understand that right now those longer benefit periods are not available, but don't let that hold you back from talking to your clients now about income protection. A lot of times when I'm doing training sessions outside of the state of California, we hear that, well, you know, my clients only want age 65 or age 67 benefit periods. Well, I can tell you that you're not really doing your clients any type of disservice by offering them a 2 or a 5-year benefit period. An average disability, if somebody is disabled for at least 90 days, So if they hit that 90-day mark, their average disability is going to last about 2.5 years. So even with a 5-year benefit period, you're going to be covering the vast majority of scenarios that occur for somebody to be disabled. Most disabilities are not they're not totally disabled to the point where they'll never work again. Okay, it's usually about a 2.5-year benefit that gets paid out, and then these people are typically back to work. Some of the policy provisions that come automatically with this policy, we use an own occupation definition for the first 2 years. So if they can't do what they do on a daily basis, their claim would begin. We have presumptive disability, so if they lose hands, feet, eyes, or I shouldn't say they lose their eyes, but they lose their vision, they lose their hearing, we can pay their claim even if they have the capability of continuing to work. Recurrent disabilities in there. We have a partial disability, so even if they're going back to work and maybe they're only able to work part-time because typically their physician will not release them to work a full 40 hours a week, we will end up paying half of our benefit to them. We have the capability of providing rehabilitation benefits to them. Every policy has a survivor benefit on it, so if they are disabled for a year or more and pass away while they're on claim for any reason, we pay 6 months of their benefit to their beneficiary on the policy, and that comes free with every. These all come free with every policy. And while they're on claim with us, we have waiver of premiums, so they are not responsible for their premiums while they're on claim with us. We talked about the optional riders and the capability of customizing policies for your clients. Right now, with PDI California, we only have 4 optional riders. When the new Century Plus launches here in the next couple of months, we're actually going to have 8 available riders. So the capability of customizing this even more for your clients is there. I do want to focus on a couple of these riders here for you. The first would be our Supplemental Disability Income Rider, or we call it the SDIR, as you can see with the acronyms up there. What this does is this pays an additional benefit to your client, and that benefit can be offset dollar for dollar by any social insurance program. So the main 4 that we have would be a federal Social Security DI claim, a workers' compensation claim, railroad or government retirement and disability plans. Okay, so the question I get is, well, why in the world would I want to put this on my client's policy if they don't have the capability of ever making a claim for this? Well, when we think about those type of things, a federal Social Security DI claim is a very difficult thing to get approved for. Only 1/3 of initial applications are approved on the first try. They state that if you're not going to be disabled for at least 12 consecutive months or die from your disability, it is not a valid claim for them. And the average payout on this is around $1,100 a month. Now, so when we talk about that, you know, the payout's not tremendously big. Workers' comp claims attribute less than 5% of all disabilities. So while workers' comp is there to protect employees, the likelihood of a disability claim through workers' comp is actually very, very small in the grand scheme of things. What I will also state is that if the client wants the maximum amount of coverage based upon their income, the SDIR, the Supplemental Disability Income Rider here, needs to be included on their policy to get there. So let's say that they qualify for a $5,000 monthly benefit. Not all $5,000 can be on a base benefit alone, okay? At least $1,200 is going to need to be put within the Supplemental Disability Income Rider. So we would split it out $3,800 base, $1,200 of the SDIR for a maximum benefit of $5,000 per month. Now, the easiest way that I've found to explain this rider, and I apologize if I've confused anybody with this, and we can talk more about this during the Q&A session, is that I like to say, if you've qualified based upon your income for this $5,000 monthly benefit in this example, you have locked in this $5,000 monthly benefit. You can never get less than the $5,000. It's just that it might come from multiple sources. Majority of it's going to come from a surety life. Some of it may end up coming from a Social Security claim. Or a majority of it's going to come from a surety life, and some of it may come from a workers' comp claim. Now, what I will tell you is that during the time where they're trying to get approved for their claim, Assurity Life is going to be paying out the entire benefit until those things are actually approved. So, again, Assurity Life would be paying out the full $5,000 until you're approved for that Social Security DI claim. There's no reason to really make this too difficult when talking about it to your client. You're locking in this benefit, and you can never get less than this benefit. It's just that it might come from multiple sources. The other factor that I will state, and then we'll move on, is that dollar for dollar, if we're talking $1,000 of base policy and $1,000 of our supplemental disability rider, dollar for dollar premium-wise, the supplemental disability income rider is going to be 30 to 50% cheaper for your client. Okay, so it's a nice way to keep the premium down and keep the policies cost-effective. One of the keys when we talk about selling income protection is to keep the premium cost-effective, and the golden rule is to keep premiums between 1% and 3% of their income. If you can do that, you have attained an affordable policy, and the client will not be sticker shocked. Okay, and the other thing that we've also found is if by keeping this policy between 1% and 3% of their income, the policies become very, very persistent. They stay on the books, and you can get paid on these for a very long time. The only other rider that I want to touch on right now would be our return of premium rider. My understanding is that we are the only carrier in the state of California to offer a policy that has a return of premium benefit on it. And we base it off of how long you can keep the policy. If the client is issue ages 18 to 44, we will give them 100% of their premium back if they can keep their policy 25 years or longer. Now, there is a step rate that is built into this, so starting in year 3, they start getting a small percentage back, and that percentage increases each and every year until they reach that maximum amount. Now, what we also do is for clients ages 45 to 55, if they can keep their policy 10 years or more, we will return back 50% of their premium. Now, I will tell you that because this is an old product, and this is maybe where you want to jump on selling this product before the new product actually launches, is that the return of premium rider itself was priced back when interest rates were really, really high. So this made return of premium very inexpensive compared to what you will see with the Century Plus policy. If you put that return of premium calculation into a time value of money, and I can assist you doing this, or I can even have financial brokerage help you with this, we are seeing ridiculous amounts of tax-free equivalent. So think about putting this on your client's policies for the next few months until the new policy is available, and because the premium is very inexpensive compared to what you're going to see there. One of the things that I like to ask and to start a conversation about income protection is, who handles your income protection? And they'll be like, well, what do you mean? Okay, you're going to get 3 typical responses. What is it? What's income protection? I protect your paycheck. Okay, is that disability insurance? Absolutely. Or, I've been thinking about that. If you initiate the conversation, I promise that you will have success selling income protection. Where other agents fail is that they don't even want to bring up the conversation. Okay, if you bring up that conversation, I promise that eventually you are going to start having success within the disability field. You could also ask, if you're sick or hurt, how would you pay your bills? And this is where it gets really difficult, is that you have to just be silent at that time. They're going to talk themselves out of every excuse that they may have. Okay, they're going to say, well, I've got savings. Really, how much? You know, when we think about if you save 10% of your paycheck over the course of 10 years, 1 year of disability would actually wipe out your savings right there. Is that really what you wanted to do? Is that why you were creating savings? Probably not. Relying on credit cards, obviously not a good idea. Not at 28% rates that are out there right now. I've got retirement plans. Okay, well, why do you have a retirement plan? Was it because you were going to be disabled? No, your retirement plan was specifically created for your retirement. And if you go after and you take that, you are going to be penalized, you're going to be taxed, and you're going to be delaying or destroying what you had set up for your retirement. Was that what you wanted to do? Probably not. And does that concern you? It very well should. And if it doesn't, then maybe they're not the client for you. One of the things, Donna and I had talked about this earlier before the presentation, is at a bare minimum, these things need to be covered. This is our needs analysis sheet called the DI GAME. And as you can see, GAME is groceries, auto, mortgage, and electricity. Not everybody may want to cover their entire income, and that's fine. But at a bare minimum, this is a great icebreaker. This is a great way to come up with a number. What do you spend a month on these things? And I'm going to venture to say that when we add those things up, it's going to be a little bit more than your clients had really thought about. So my point is that by adding these things up, and let's say that it's $2,000 a month, let's get you a policy for $2,000 a month. That way you don't have to worry about if groceries are on the table, not having your car repossessed, whether or not your mortgage is going to be paid. And, depending upon where you're at in California, I know at least in Nebraska today that we've got a high of like 13 degrees. I want my heater on. And when the summer comes and it's 100 degrees outside, I want my air conditioner on. I don't want to have to worry about those type of things. It's a great icebreaker, and it's a great way for people to put this on paper and to have them understand how much they're really spending on these things, because they're often really unthought about because we pay them on a monthly basis. If you only take one other thing from today's presentation, the first one would be to have a story to tell. You've got to have a story to tell. The second one would be use this illustration checklist before you show them an illustration or before you take an application. And we call it an illustration checklist, but really it's a pre-screen tool for your clients. And these are available on our website. The great folks at Financial Brokerage can send these over to you as well. But basically what we're going to do is we're going to find out the job duties of the client. That way we know which occupation class they can fit into. We're going to find out how they're earning their money and what type of money they're earning. That way we can get you an illustration for the right benefit amount. And then the rest are some generic health questions. What I will tell you is that if they can answer no to all of the generic health questions, you're free to run an illustration and you're free to take an application. If the client has been forthcoming with you and been honest, we typically don't see that many surprises during the underwriting process. However, if they answer yes to anything, please get this information to Financial Brokerage, or you can even send it directly to Assurity Life, but Financial Brokerage wants to see these as well. And they can help get you a pre-screen done. We'll put the illustration together and even email it right back to you. Okay? So it couldn't be more simple. Now, I know that this looks like a simple piece of paper and you really can't read it on your screen, but what I will tell you is that we've actually tracked agents that use this versus those that don't, and the agents that use this checklist place 20% more of their cases. I'm going to ask you a question. Is taking 5 minutes of your time worth 20% more income to you? Absolutely it is. And this will take out, like I said, all of the headaches during the underwriting process. So with that, I will, Don, I will open it up. I'll turn it back over to you and open it up for any questions.
Okay. Well, thank you so much, Todd. You did it. Oh, go ahead.
I apologize. One of the things that I want to mention, and one of the key differences in the state of California versus what we will have outside of the state of California, regards the supplemental disability income rider again. I know I kind of bombarded you guys with information regarding that. But in the state of California, it automatically comes with a 365-day elimination period for that rider because of the state program that has been set up. Okay? So the base benefit will be paid out after the elimination period, and then if they are not going to go on a federal Social Security DI claim or a workers' comp claim after the state benefit has been paid out for a year, then we start paying the additional amount of the SDIR to them. So I want to make sure that I clarified that.
Okay, and we are having some questions come in. Okay, one of the questions is, and I'll just go ahead and read these to you, Todd, and then if you could answer them. How would you counter if a client said, I have workman's comp? So if they already have workman's comp, how do you counter that?
I would counter that by making sure they realize what workers' comp covers and does not cover. Workers' comp only covers on-the-job illnesses and injuries, which is why 5% of all disabilities are workers' comp related. That's a very, very small number. So what happens if it happens on a weekend or while they're at home? You know, What if they fall off their ladder? What if they get into a car accident? And what I will tell you is that it's not just injury related. 9 out of 10 disabilities are actually illness related, not accident related. Okay, so when we think about what about cancer? What happens if they get? We've had claims for people getting mono. Things like that. All of those illnesses that are out there, those are typically not going to be work related, so they would not be covered, and they would only be covered during work hours. So it's really not a feasible option to rely upon.
Okay, great. Thank you. The next question is, can you underwrite professional athletes?
No, we do not underwrite professional athletes. I wish we could because California is chock full of them. There is actually only, if you don't mind me mentioning this, Donna, there is only one carrier out there, and Financial Brokerage can help you with this. Peterson International Underwriters. They are based in Valencia, California. They are the only carrier. They are the Lloyd's cover holder for the United States. So they are the only carrier that has the capability of underwriting professional athletes.
Okay, great. Thank you. The people were asking also about if the slides or the audio are going to be available, and that we are working on. So that is something that that's a great question. But yeah, at this point, we are recording this session, and we're working on how to get that out to the field. But we wanted to make sure that you are all attending live here today, so we can get these questions answered as we're going. See here, I have another question here. Let's see. Trying to see exactly what this question is. Is this reduced from any other benefit, paid, workman's comp, any other DI, etc.? Are you saying that in a California policy you won't pay for 1 year? What about the elimination periods like 90 days?
Yeah, no, we will pay the base benefit. So when we look at how the benefit is structured for the client, we have a base benefit, and then we have the supplemental disability income rider, and those two things combined get them to their total monthly benefit. After their elimination period, we will pay out the base benefit, and then after we hit the year mark, we're going to pay the base benefit and the SDIR, unless they're already getting paid through a workers' comp claim or a federal Social Security DI claim.
And again, that's after 1 year before they can get that extra SDIR benefit, correct?
That is true.
Okay. And then they are asking, can a person collect workman's comp benefits and under a disability policy? So I think you kind of answered that, but if you want to go ahead and just say that one more time.
Yeah, just as long as they had our policy before their claim started. Obviously, if they're on a workers' comp claim now, underwriting is not going to approve them for a policy. But yes, we can pay out at least our base benefit, and then any portion of the SDIR that's not being picked up by workers' comp.
Okay, good question. If a client applies for Social Security and takes paying the claim that is in the meantime with the supplemental disability rider, is there a pay based backed on the approved amount? Is that based on the approved amount of Social Security?
Yes, it is. So let's say, just for round numbers' sake, that the supplemental disability income rider was $1,000 per month, and Social Security says they're only going to pay them $600. Assurity continues to pay the difference of $400 out of that supplemental disability because Social Security is going to pick up the other $600. So at the end of the day, they still walk out with their full $1,000 of that benefit.
Right. Okay.
And we don't ask for any of that money back. So usually it takes Social Security a very long time to approve a benefit. And so if we've been paying out our full, say, $1,000 in that example, and there's some back pay from Social Security, we don't ask for any of that money back.
Okay. Another question is, how much of workman's comp is paid, and how long does a client need to wait versus the period-based benefit of DI?
That part is really going to vary from case to case. Some workers' comp claims are paid out immediately. Some go through a very lengthy process. I've even seen attorneys have to get involved for workers' comp stuff. So until a benefit is finally paid out, Assurity is going to continue to make the full payment to the client.
Okay, great. Someone was asking about, we actually, financial brokerage, we also have a pre-screening questionnaire that we use, and it's a little bit different than your checklist. Either one is available, and I'm happy to provide either one of those so that they're asking, it doesn't say a surety on it, it says from financial brokerage, we're asking that there's 2 different pre-screening questionnaire forms, and yes, there are 2. So if you're interested in the surety checklist, I'm more than happy to help you get that. Just let me know that's what you're looking for, and I'll be happy to get that for you.
I would venture to say too, Donna, that I bet you've got a lot of the same questions on your pre-screen that we do too, and that's the key, is just to make sure that it doesn't matter which one you use, as long as those questions are being asked. The goal is to eliminate those headaches in the underwriting process.
Exactly. We're looking at both income and medical in the background. That's why we have a pre-screening questionnaire that we talk about as a fact finder first.
Right.
Then we have actually a disability quote sheet that we use after that.
Right. Now, I'm going to want to mention one thing here quick too, Donna. And we didn't really get into the underwriting process per se, but I will tell you that in the state of California, our guidelines do require, no matter what the benefit amount is, that the client have a full paramed blood and urine completed.
Next question is, can you drop the return of premium and take home the money accumulated and keep the plan in force without the return of premium rider on it?
Typically what we do is for the return of premium to be dropped, the policy has to be terminated.
Okay. And regarding the return of premium for that respected age group, will the premiums be fully returned after the 25th year?
It would be, if they would choose to terminate their policy, let's say that you've got a 20-year-old and they keep it for 25 years, that only puts them at 45. If they terminate their policy, we would return back 100%, but the policy is actually good all the way out to age 65. So it's whenever they terminate their policy or age 65, whichever comes sooner.
Okay. And then, I'm not sure if I'm reading this correctly here. Of issue 8 or at death. I'm not sure exactly what that question is meaning. In California, is it a 1-year elimination period only, or are there other shorter periods?
No, the base benefit gets choice of 30, 60, 90, 180, or 365 days, but only the supplemental disability income rider, that's locked in at a 365-day elimination, because of the state Social Security benefit that's provided after day 7 to California residents.
Okay. And on that previous question of issue 8 or at death, if you could be a little bit more, typing your question a little bit more explanative, I'm not sure exactly what that question meant. Okay, so what would you say would be a good starter policy for someone that, let's say that they're, because, return of premium, isn't they say it's best for persons under age 40 years old? For instance, return of premium, isn't that a general guideline?
You know what? Well, when we put the return of premium on, it doesn't, when we throw it in that time value money calculation that I like to do and how I like to present that, really, they're getting similar types of returns even all the way through age 55, even though they may only be getting back 50% of their premium at those older ages. When we put it in a time value money calculation, they're still getting about the same as somebody that would fall into those younger ages and could get back 100%.
Right, but for the most cost-effective part
Correct.
of that rider, is that for persons under 40, or it doesn't make it? Are you saying that the age up to
it doesn't make a difference?
Does not make a difference.
It really does not make a difference. No. When we present it through time value of money, and I've got a whole presentation on that too, which is something we can tackle at another time. You can see how those returns really pan out. As you were talking, a good starter policy. We talked about that our needs analysis, the DI game sheet there. That to me, that's a great starter policy. At a bare minimum, let's add those things up, and this is what you need to do. Maybe their income does justify a $4,000 monthly benefit, but when we add up the DI game stuff, and that only adds up to $2,000, there's your starter policy at $2,000 a month.
I see. Okay, great. Okay, let's see if there's any other questions here. You guys have some very great questions here. All right. Please confirm if California does not have a 30-day elimination period.
It will not on the new product. My understanding is the current product does.
Okay. All right. Is there a return of premium minus claims?
Yes.
Okay. What does the client need? What does the client need to qualify for the full DI benefit?
Well,
I don't know if they're asking if they did. Are you asking for the full DI benefit or? Go ahead. I'm sorry.
Probably the tax returns or financial documentation is one of the big things there. If they are W-2, we ask for at least their last 2 pay stubs, or a W-2 if that's easier. If they are 1099 or self-employed, we will ask for at least 1 year worth of tax returns, personal and business.
I see. Okay. Great. And looks like I think that's about there. And the main other thing with the starter policy too is, like you said, you don't always want to just always ask for the maximum benefit for the longest period of time. For the starter benefit, maybe you want to just look at the game firstly.
Right.
And then maybe
exactly.
start with those sweet spots, like you said, the 90-day elimination period with the 2 or 5 year benefit period. Is that correct?
Right. Exactly. When we think about how the premium is structured, the shorter the elimination period, the more expensive the premium gets. The longer the benefit period, so the longer that we end up paying out the claim, the more expensive the premium gets. So if we're trying to shoot everybody into a 30-day elimination with a 5-year benefit plan, we're looking at the most expensive possible policy, out there. Take a look at that 90-day elimination period, and remember keeping those premiums between 1% and 3% of their income.
I think that's key, definitely, between the 1% and 3%, because otherwise you scare them off, and then they would say, I can't possibly afford that. So it's always keeping that in mind. Mm-hmm. Okay. Let's see here. And looks like here. Okay. They have a new client to quote, and my understanding is that we do not have the 30-day elimination period. We have a minimum waiting period of 60 days. I think is that okay. Minimum?
And that I would need to check my guide. We've had this product out there for going on 12 years, so if that slide was wrong, I do apologize. But I know for a fact when Century Plus launches, there will be a minimum 60-day elimination period.
With the new Century Plus, which will be this first quarter.
Correct.
Okay. Is there an initial delay before an approved policy can have the first claim?
No. We do have a contestability period for the first 2 years. So as long as the client was forthcoming during the underwriting process, as soon as the policy gets approved, and if something happens to them the next day, and there was no prior history or knowledge of it, that is a valid claim every time.
Okay. Great. You guys are having some great questions here. I appreciate that, and appreciate Todd you being right on the money on getting this proper response here. Okay. Just trying to see if we have any other last questions here. Okay. Well, Todd, again, I wanted to thank you so much for giving us a presentation today. Now, we're going to just talk our last few slides about how to actually get contracted with a surety through the Western Southern website. Now, again, this webinar was only for Western Southern agents in California, so you guys are very special that we have this webinar. And a surety has a competitive edge in California, as Todd has talked about, some of the key differences that we've been able to, that are only available, for instance, on the return of premium. So I hope that you've all have got that as well. So I'm going to just go through the last few slides here. Todd, did you have any last comments before I go through those last 3 slides?
No, I just want to thank everybody for their time today, and if there's anything else that we can do, please let us know. Oh,
you know what? We had just one last one here come in here. What is the process to increase an in-place policy from, say, from like a $2,000 to a $4,000 case?
In a lot of cases, unless they have a future purchase option on their policy, I like to stack policies on top of each other. So if they already have a $2,000 benefit and they need $2,000 more, let's just write them a policy for the difference of the $2,000.
Okay. And another one just came in too. So we're having some great questions more. Okay. Are we the cheapest DI out there in California? Assurity, are we the cheapest?
I will say right now that would be a lot of the case. You know, it depends upon which market you're looking at too. The unfortunate thing is that disability can't really be spreadsheeted like a life case. I don't know if anybody uses WinFlex or tools like that on the life side. In the disability world, we're never really ever comparing apples to apples. So to me, premium is a little bit misleading. Because every carrier has a little bit different benefits and different definitions of disability. And the one agent I will mention real quick before I let you carry on here, Donna, and I'll get off your call here so you can take over. The caller was correct that minimum elimination period currently is 60 days in California. So there is no 30-day available. So I apologize for that misinformation.
Well, we're glad we got that straightened out now, and thanks for the great question. Good catch on their part. Okay, well, Todd, again, thank you so much for presenting, and I do have a few last slides to go through just for the Western Southern agents to kind of let them know how. I think you did such a great job, and hopefully everyone's really excited now about these new ideas that they've had, opened up sales ideas and what the product's about. We just want to tell you want to let them know how to go ahead and get contracted with Assurity.
Absolutely. Have a great day and a great 2015.
Thank you, and you too.
Thank you. Bye.
Okay. All right. So the first thing here is, as far as on the first thing on the Western Southern website here, to get it contracted, you go to the Western Southern Agency. It's kind of highlighted a little bit on the bottom there. First thing is you go there. Second part is you're going to go to Financial Brokerage Disability Long-Term Care. And underneath there, you're going to see something that says Assurance Bay. Now, Assurance Bay is something where you're going to have to register as a new user, and as that, you have to do that for each carrier that you're going to be contracted with. So you would go after you fill out your information on Assurance Bay, you would choose Assurity is who that you wanted to be contracted with, and as soon as you're contracted with Assurity, then that's when we can go ahead and get you quotes on that. So we're not able to get you quotes until you're actually contracted with the carrier. But today you've got some good background information about what Assurity has to offer. I am, again, Donna Reese, your contact person for both long-term care and disability. So if you have any questions one-on-one, I'm more than happy to answer any of those questions on those for you too, or to get you the information that you need. If you want to get the copy of that checklist, I can get you that. Also, one of the things that we didn't mention there, Assurity also has something where they have occupational brochures where they talk about something specific towards, for different occupations. They have little brochures that they can have for that too. So they have a lot of a wealth of information that they can help you with as far as on their website. As far as I can help you as to coordinate that as well, because my job here is to try to make it as easy as possible for you. So. Again, I wanted to thank you all for attending today's webinar. You had great questions. We hope that today's session has opened you to new ideas and expanded your ideas to some new sales. Again, we talked about many prospects that we have available on that. We do appreciate your time, and I look forward to working with you all soon. So this is my contact information here. Feel free to write that down. Either my email address, or you can go ahead and contact me by phone. I'm always happy to help you. I do appreciate that, and again, we'll try to get this webinar as far as getting the recording on this as well. So again, I do want to appreciate all your time for attending today's session, and hope that you all have a great new 2015, and look forward to working with you all. At this time, that is the end of our webinar, and thank you for attending.